All right. So once again, good morning. Let's begin. Today we will go over the homework for chapter 18. I know it's only due tomorrow, but today's the last day that I see you guys. So I just wanted to go over it and make sure that there aren't any lingering questions because there is a question on chapter 18 in the final exam. So let us do that. And then the other piece of what we'll do today is if you haven't seen this already, it went out pretty late last night. I sent out a calculation for everybody of their grade to date. I tried to send it to both your LaGuardia email and if you had some other preferred email in the system to that as well. So you should be able to find it likely in your most recent emails because I sent it out pretty late. So please have that ready for later on in the class, pull it up. I'll walk everybody through the calculations, and then as I had promised in a previous class, I will also show you how you can kind of use the formulas to see, what you need to aim for on the final exam in order to, I guess, get to whatever grade you're hoping to get, if that's possible. So there's that, and then I guess we'll just wrap it up by just once more for the last time going over what will be on the final exam. The final exam window opened this morning at 9 o'clock and it will close next Wednesday at midnight. So on the 10th, it will close. So you have, time to take it. Obviously, just remember that once you start it, you have to do it all in one shot. Okay, so I will move into sharing my screen to go over the homework for chapter 18. Now, the usual stuff applies that I obviously won't have exactly the same numbers as you, but the process of whatever we are talking about, all of those things are going to apply regardless of the numbers. So for chapter 18, we're talking about financial statement analysis, predominantly ratio analysis, and the ratio analysis is falling under the three categories: liquidity, profitability, and solvency. So what these questions aim to do is to test your knowledge to see if you're able to use the formulas appropriately, and for some of them you have a little bit of commentary that you have to give. I'll just say again, this is probably like the fifth or sixth time that I've said it, so those who are paying attention are going to get exhausted of hearing this, but I'll just keep saying it, that when you are taking the final exam, please make sure that you have a formula sheet ready to go next to you so that you have all the formulas that we went over in class. You can either do that through looking at the handout for chapter 18, or you can go through the textbook and copy over the formulas, whatever is easiest. But there should be no reason for you to while you're taking the exam be scrambling to find formulas. That's just a phenomenal waste of time. So for chapter 18, remember, let me just go here. It should be in the call. I'm logged out of Blackboard. Just one second. All right. Let me see. Yeah. So you see here where it says chapter 18 class notes. In those notes are most, if not all, of the formulas that you need. Sometimes in chapter 18, they also use free cash flow. The free cash flow calculation came from chapter 17. So please just make sure that you have all these things handy. All right, so we'll start with brief exercise 18-11. So this is a question around accounts receivable turnover and what they call the average collection period, which is just the days in accounts receivable. So things like that also make sure that you do the homework and that you practice and so on, so that you can know that average collection period is the same as days in accounts receivable, so that you don't end up getting stuck with something as simple as that as well. So the following data are taken from the financial statements of Colby Company. They've got a net accounts receivable at the end of each of these 2 years. So 2019 is 555,000 and 2020 is 500,000. Net sales on account, 3 million in 2019 and 3.9 million in 2020. Yeah, they tell you this is coming from I guess accounting one work, which you may or may not remember. Basically, it's saying that we sold these items and we gave the people terms that if they pay within 10 days of the invoice date, they get a 1% discount. And if not, the net amount that is due, so any purchases minus any returns that they made, is due in 45 days. So why should you care about this? You should care about this number, 45 days, because that is what the company is saying, that that's the maximum number of days that they give people to pay. And remember, accounts receivable sitting on your books is basically cash that you don't have in your pocket. So the sooner you collect from people, the better for the company's cash position. So what we would want to look to see is whether the average collection period or the days in receivable really should be either equal to or lower than this number, right? You don't want people to take longer than the maximum amount of days that you give them to pay, because again, you won't have that cash in your pocket. So compute for each year the accounts receivable turnover. At the end of 2018, accounts receivable was 470,000. So the reason they tell you about the ending balance on 2018 is that when you calculate accounts receivable turnover, you actually have to use average accounts receivable, and that would be beginning balance plus ending balance divided by 2. So the end of 2018's balance is the beginning of 2019's balance. So let me just open this up over here. Again, like I said, you guys have, may have different numbers to me, and that's fine, but I guess the rules remain. So if we look at what they do for 2020, right, they add up the 555,000 receivables from 2019, because again, the ending 2019 is the beginning 2020, adding 500,000 2020 AR, divide by 2. So this is the average net accounts receivable. That's this number, 527,500. Remember, the numerator is just sales, right? So you're going to take the 2020 sales, 390,3,500. That gives you 7.4 times. So for 2019, you know that you have the ending balance, 555, but you don't have the beginning balance, which is why they give you the 2018 number, 470. So you add the 470 and the 555, you divide by 2. So the average net accounts receivable for 2019 is 512,500. The sales is 3 million. So that comes out to 5.9 times. Any questions on that? All right. So that's where those two numbers came from. So now the easy, I guess the helpful thing about average collection period or days in receivable, however you want to call it, is that it's once you've mastered this number, you basically are in for a very easy time, because the days in receivables is 365 divided by the turnover, right? So for 2020, the turnover is 7.4. So the 365 divided by 7.4, 49.3. And in 2019, it was 365 divided by 5.9, 61.9. So what do we see here, right? That's what we already should be thinking about. Remember, I told you that the company said that the maximum amount of days that they aim to give people to pay is 45. It turns out that in 2019, people took on average almost 62 days to pay. So that's not a good management of the accounts receivable, because you're saying people almost taking 20 days more than they should to pay, which means you're waiting very long for your money. Remember, on the other side of this is you have suppliers who are not going to hang around waiting for you to pay them. So you might end up in a situation where you're not receiving money from customers, but you have to pay suppliers. So you end up having a cash crunch. Now, what we can see, though, is that between 2019 and 2020, the company has improved their situation, right? Because they went from taking 62 days to taking about 49 or almost 50 days. So that is an improvement. However, they are still not at the level that they need to be. So if you were writing this up, and we'll go to that in a second here at the essay part, you probably say that there's been an improvement in the management of accounts receivable because they've gone from 61.9 to 49.3 days. However, they are still not at the target of 45 days. Any questions on the collection period? Excuse me. All right. So for the essay, weirdly, I guess it's because they, everybody gets different numbers. So when it comes to the essay, they're actually not giving you, it's not based on the numbers that you just calculated, I guess is my point. They kind of just give you some assumed numbers, which I find a little bit silly, because you kind of just thought through, your answer based on your own numbers. But nevertheless, let's just go through it. So basically, what conclusions about the management of accounts receivable can be drawn from the accounts receivable turnover and the average collection period? So obviously the turnover increased slightly, right? And then also the days, the collection period situation improved, but it's still not at 45. So let's see what they say here. Colby Company can be somewhat pleased with the effectiveness of its credit and collection policies. The company has decreased the average collection period by more than 2 days, and the collection period of approximately 46 days almost equals the 45 days allowed in the credit terms. So when it comes to this answer, guys, if you want to use the numbers that you just calculated in part A, that makes total sense to me, and you can just base your explanation on that. If you want to base your explanation on what's happening over here, that's fine. Either one is acceptable. You don't have to use all this flowery language. What am I looking for? I'm just looking for you to say that the turnover has improved and that the collection period has also improved. It's not quite equal to the 45 days, but it is getting close. All right. I know people always struggle with this part because it's like, well, what do I say? And so I think part of what the struggle with the written part is, I think, is that it's actually almost at times too obvious, because you're basically telling the reader what you just calculated. So you're stating, that the turnover, you can even say the amounts, like the turnover went from 7.5 to 7.9. So there's been an improvement in turnover. The average collection period went from 48.7 to 46.2, which also represents an improvement in collection. So the company can be, pleased with what they've done, but they still haven't met their target of 45 days. So there's no, dramatic like essay and so on that you need to write. You almost just have to tell in words, to someone who's looking at your numbers. You're just explaining in words what the numbers are saying. I hope that that might help a little bit to allay the fears of what do I write. Just basically tell me in words what you just told me in numbers, and if there's anything that you can compare it to, then do that. Any comments or questions on this? Sorry, I'm just trying to see if anybody is asking me anything. Okay. Okay, so I'll move on. 18-12 is then the inventory side of things. Also turnover, inventory turnover, and then the days in inventory, right? So when you're faced with this, the following data were taken from the income statements of Maydorf Company. You've got a sales number, beginning inventory, purchases, and ending inventory. So you may recall, I guess it was last week, when I said to you, because we know that inventory turnover requires a cost of goods sold number, right? So cost of goods sold divided by average inventory, that's the turnover calculation. But what is fairly evident over here is that there's no cost of goods sold number. And I had explained to you last week that you guys may remember this from Accounting 1, that you can calculate cost of goods sold if you are given beginning inventory purchases and ending inventory, because cost of goods sold is, obviously it's basically the difference between everything that you had and whatever is left over. So to calculate cost of goods sold, you basically add the beginning inventory, that's what you started with, to that you add anything that you purchased during the year, and from that you subtract anything that's left over, and the difference is going to give you cost of goods sold. So just to show it over here in the solution, they're doing the same thing. Beginning inventory plus purchases, that's everything that's available for sale. Subtract the ending inventory and you get cost of goods sold. And you follow the same approach for 2020 and 2019. Questions on the cost of goods sold calculation? All right. So then how do you calculate average inventory, right? So for 2020, the average inventory is just going to be, right, the beginning plus the ending divided by 2. So it's 995 plus 1030 divided by 2. And for 2019, same thing, beginning plus ending divided by 2. And when you do these calculations, please be careful. I guess when some of you may be sitting working on your phone's calculator, which is fine if that's what you're doing. I just want to make sure that you remember that sometimes certain phones, you have to be careful of the order of operations, because it might, like if you have these two numbers and you punch in this number and say plus this number and then just divide by 2, sometimes it only divides the last number by 2. So you may want to use parentheses when you are doing these calculations, adding things and then dividing, because for whatever reason, certain, if you're using a calculator, might be a little bit better. But like I said, with some of the phones, if you don't put equals after you add two numbers and then divide by 2, then it actually just divides the last number by 2. And I know how frustrating it can be sitting, trying to do a test and feeling like you are inputting all the correct numbers and still coming out to the wrong answer. And it's entirely possible that it could just be that the phone is not doing the order of operations appropriately. All right. So make sure you're using parentheses if need be, or add two numbers, press equals, and only then divide. So this is the inventory turnover. 4.2 and 4.9, and then same story, right? With days in receivables, the days in inventory is also just 365 divided by the turnover. The turnover is pretty low, so you can already guess that the days are going to be very high. So 365 divided by 4.2, 86.9, and in 2019 it was 74.5. So there's actually been a deterioration here, right? Because the inventory turnover has gone down, which means the inventory is hanging around for longer. And in this one, you can see in terms of days, it's around for 15 days longer in the current year than in the previous year. And again, just like with accounts receivable, balances that are growing or not being collected, inventory sitting on the shelf represents, revenue that you don't have, cash that you don't have in your pocket. So if inventory is just sitting there for so long, it's the business is not able to convert it to revenue, and that could also signal either that there isn't any demand for the particular type of inventory, or maybe that they, just, well, I guess it's the same thing, that they don't really have the customers that they need. Look, if this is, Rolls Royce sitting on a floor of a luxury car dealership, I don't think anybody's going to complain if it takes 3 months to sell the thing, or some massive diamond or whatever, because if you sell one of those, the margin is so huge on that you'll be fine. But if this is just like a regular retail store or supermarket or something, that level of inventory days it's just too high. So if we look at, again, they give you their own numbers, but you can see that the trend is the same. the inventory turnover has declined and the number of days in inventory has gone up. So overall, not a good look here. So let's see what we say. Management should be concerned, right, with the fact that inventory moves slower in 2020 than it did in 2019. The decrease in inventory could be because of poor pricing decisions or because the company is holding obsolete inventory. They just asked what conclusions can you draw. I mean, if you just wrote that, inventory turnover declined and the days in inventory went up, management should be concerned because the inventory is moving slower in 2020 than 2019. That would suffice. That would be enough as far as I'm concerned. It doesn't really ask you in the question to speculate as to why this is happening. I mean, if you do want to speculate, that's fine. It's obviously a more robust answer, but the minimum answer would just be to, again, state the obvious, right? Inventory turnover has gone down, days in inventory have gone up. Management should be concerned that the inventory is moving slower in 2020 than 2019. Questions on any part of 18-12? All right. So this is the big one, right? The Target and Walmart comparison. So you were asked basically to do, ratios for both of these companies, 12 different, 11 ratios, and then also free cash flow calculation. So this is, it's obviously a big question, but it's also part of in like showing us why financial statement analysis is actually so useful. Because if you look at these two companies and you kind of just try to choose one thing to base your decisions on, like if you said, well, I may want to buy stocks in one of these companies, and you may recall from a few weeks back when we looked at their stock prices, they were fairly similar, Target and Walmart. So you're like, oh well, which company do I buy? If you just look at whole numbers, I mean, Walmart is making sales of 408 billion. That's a lot of sales, right? And Target is only 65 billion. And then Walmart has net income of 14 billion and Target is only 2.4 billion. So, it's possible some people just go in and say, well, it looks like Walmart is bigger, so I'm just going to, buy that stock. But the smarter way to do it is actually to do a type of side-by-side analysis like they're doing here. I mean, in the end, we do see that for the most part, for a lot of the things, Walmart ends up performing better than Target. But I mean, that wouldn't necessarily be the case every time you compare two companies. So, when we started this chapter, we spoke about why would you do financial statement analysis? And it's kind of for this very reason that two companies may be in the same business, existing in the same industry, the same sector, but just looking at their financials doesn't necessarily tell you everything that you need to know. The ratios kind of put them on an equal footing where you can then truly say, okay, I'm able to make an informed decision about which company is better. So So we've got a income statement, balance sheet. They give you some beginning of the year balances, and that's because some of the things will have to be averaged, right? So the beginning plus ending, and then other data that so yeah, they help you at least because they give you the average accounts receivable, the average inventory, so you don't have to calculate that. This net cash provided by operating activities, the capital expenditures, and the dividends, these three things go into the calculation of free cash flow, right? Because the formula for that is the net cash provided by operating activities minus the capital expenditures minus the dividends. And that tells you the amount of cash that is free for the company to use for other things. So these last three are those or are relevant to that that piece of the question. So I mean, when I bring up the answer, it's going to look a little bit crazy because there's so much going on. So I'll just I'll basically try to just show, at least for one company, which numbers are being used. So for current rate, and I'll also just repeat the ratio, like how the ratio is calculated, right? So for current ratio, you're talking about current assets divided by current liabilities, right? So for both companies, you're using the same lines here. And so we do that and we end up with a 1.63 to 1 and a 0.87 to 1 for Target and Walmart respectively. So what this then means is that for every dollar of current liabilities, Target has $1.63 of current assets, and for Walmart they only have 87 cents. We normally aim, as a rule of thumb, for something close to 2 to 1. So in this instance, Target is actually doing a little bit better. They basically are double, almost double what Walmart has for current ratio. So that's how the current ratio is calculated. We already discussed how to calculate accounts receivable turnover and average collection period. There you can see is the average accounts receivable, and the sales would be coming from the income statement. So again, you know, you're the whole point of this work is not to try and memorize formulas, but to know how to plug numbers into the formula and get to the correct answer. So again, this question might look daunting if you haven't done it already and you're like, oh my, why do I really have to do this whole big thing? But it's all about practice, all right? So we know what the formula is, and based on the formula, 8.7 times is the turnover for Target. That's how often they collect their accounts receivable, and then Walmart is 101.4 times. But you know, if you're looking at that, you have to also think about what terms do these people give their customers. Maybe Walmart is predominantly cash, so it looks you know, weird, like, oh, it only takes people 3.5 days to pay off their balance, but it's probably because most of their customers are cash customers, so they're not dealing with a lot of accounts receivable. Whereas we know that Target has a store card that you can use to buy your groceries. I don't know if Walmart has that by now. I mean, this question may be a little bit older, so it makes sense that Target probably gives a little bit of extra time for people to pay. Inventory turnover, same thing as what we just did in the previous questions. You're taking average inventory and its cost of goods sold, right, at the top. So again, Walmart is beating out Target here. Their inventory is turning over 9 times. Target is only turning over 6.6 times. And so obviously then the days in inventory for Walmart would also be lower because the inventory is being sold much faster. So far Walmart is doing better, except for the current ratio. And these are all of these from 1 through 5 are the liquidity ratios. So if I was answering, if someone said, how are they doing in terms of liquidity, I would say that Walmart's liquidity is better than Target's because it has a higher, you know, inventory and accounts receivable ratios. It's just on the current ratio that Target is doing a little bit better. And we'll get to the essay. I'm just kind of in real time talking you through how you would be thinking about the stuff, you know, while you do it. Profit margin, how do we calculate that? So we can go into the solution and see. So where do these numbers come from, right? Because there's no formula. That's why you want to have your formula sheet. It's going to be the net income, right, divided by the sales, divided by the revenue, because you're saying, here we go. Let me just show it again. Right, and it's a percentage, so which has already been input for you, so you don't have to worry about that, about remembering that it's a percentage. But you might end up on your calculator having 0.038 something something, and because this is expressed as a percentage, you have to remember to multiply by 100, so that if you type in 0.038 into the answer over here, it's gonna come up red. Okay, so it turns out then that your answer is correct, but you have to remember that it has to be expressed as a percentage. So again, you know, make sure that you are following the proper instructions here, because remember, Wiley always gives instructions on how you should be doing the rounding and so on. So target has a slightly higher profit margin. Then you've got your asset turnover. So that Walmart is higher there. And, you know, if you look in here again and you want to see, okay, what is asset turnover? You know, what are these numbers? It's going to, that isn't necessarily as helpful as having the formula sheet, but I obviously have to know this. So it's going to be the sales divided by the average total assets. So they don't give you an average assets number over here. So you will have to, yeah, you can see total assets beginning of the year balance. So you will have to use that number plus the 44 and divide by 2. Okay, so have the formula sheet ready, see which inputs you need, and then go and look in the material to find them. So asset turnover, the sales divided by the average assets, all the information is here. The return on assets, instead of using sales, you are using net income, right, as the numerator. So if you did a good calculation for asset turnover and you got it correct, then you could just use your average assets from number 7 to plug into number 8. And then return on common stockholders' equity is going to be, the formula is net income divided by your average stockholders' equity. So these are the numbers that you're looking for. This is the end of the year, and here's the beginning of the year. So again, average means beginning plus ending divided by 2. So that's how they get to this number. Walmart is better in stockholders' equity. So from 5 through 9 are the profitability ratios, and sorry, not 5, excuse me, from 6 through 9 are the profitability ratios. And once again, Walmart, excuse me, is better, you know, has better profitability on all of these ratios except for profit margin, where target is slightly higher. And then the last part that we look at is solvency, right? Solvency. So liquidity is whether you can pay your debts in the short term. Solvency is whether you can pay your debts in the long term. And the two solvency ratios are 10 and 11, debt to assets ratio and times interest earned. So we did all the stuff in class already. I mean, you can go back and watch the videos, you know, at your leisure, but we know that debt, when we're talking about debt here, we're talking about total debt. So, you know, total liabilities, not just current liabilities, current and long-term liabilities have to be added together. And this is not an average, it's just the total debt. So you're adding the debt for target and you're dividing it by the total assets, which are over here, all right? So again, you know, the workings aren't maybe as helpful because, well, let me see, maybe they show, yeah, they're not as helpful, but the point is this is the sum of the current liabilities and the long-term liabilities, and this is the assets, right, for Target, and it would be the same for Walmart. So Target has a 66% debt to assets ratio. That means that 66% of their assets are financed through debt, and Walmart is 58%. For this ratio, you want to have it as low as possible, because you don't want to get into a situation where so much of your business is financed through debt. If anything happens and you can't pay, then remember that all those creditors are going to try to come and seize your business. In fact, we've seen it now with COVID and you know, all the basically what amounts to an economic collapse, that many of the retailers, for instance, have declared bankruptcy. And when you read the articles on their bankruptcy declaration, then you end up finding that a lot of it has to do with the fact that they took out enormous amounts of debt to keep the business going as retail was struggling over the years. And now, because, you know, everything shut down, for the most part, they aren't able to generate revenue and thereby cash to pay sometimes even the interest related to that debt. I mean, this is the same like in our own lives, right? You don't want to finance your whole life on a credit card, for instance, because you always have to be working to pay that back. You want to be able to actually finance more through equity, so more through money that you actually have as opposed to money that you need to borrow. And then times interest earned is also a solvency ratio. It's basically saying how many times does your net income before the interest and before any tax, how many times that can you pay your interest bill? How many times does your net income cover your interest? And the way we look at that is we go into the income statement, and you start with net income, you add back the income tax expense, you add back the interest expense, and then you divide that number that you arrive at by interest. Sounds a little bit involved, but remember I did this with you guys in class also. So this year is showing what I just said. You take the net income, you add back the income tax, you add back the interest, that's the number on top, and at the bottom is the interest number. So for Target, they are able to pay their interest 6.5 times over. Walmart is able to pay the interest 11.4 times over. We want this number to be as high as possible, because the more you can cover your interest with your income, the more likely a lender will be to actually lend money to you, because they're able to see that you can generate enough profit to be able to meet your debt obligations. So if we look at solvency, we can see that once again, Walmart is beating Target in that area as well. And then we had discussed free cash flow. I'm not surprised that Walmart would have higher free cash flows than Target, considering the amount of money that they generate just through sales, right? I mean, it's an enormous amount of money. So their net cash from operating activities is 26 billion, whereas Target is only 5.8 billion. What I will say though is that Walmart has huge amounts of capital expenditures and dividends, because even though they start with 26 billion, in the end, they only have 9.8 billion free cash flow. Target starts with only 5.8 billion, but they have 3.6 billion free cash flow. So it's just different ways in which people are managing their business. I guess Walmart may have more stockholders, or they're just paying a bigger dividend. They probably also are expanding more in terms of building out stores and so on. Questions? Yeah, anybody? I've spoken a lot now. You can also talk now. All right. So for the essay part, they ask you to compare the liquidity, solvency, and profitability of the two companies. So like I said, 1 through 5 is liquidity, 6 through 9 is profitability, and then 10 and 11 are solvency. So when you look at what they say here, the question does try to discuss the results in terms of those three categories, and you don't have to go and list every single item that is being calculated. But what I have noticed sometimes that students do, which is not correct, is you can't just speak about one ratio within the category. So sometimes people, when they talk about liquidity, they only discuss the current ratio. Remember, it's the current ratio, it's all the accounts receivable ratios, and it's the inventory stuff. So yeah, it says Target's current ratio is 1.63 to 1. It's better than Walmart's 0.87 to 1. However, Walmart has better inventory turnover than Target, and its accounts receivable turnover is significantly better than Target's. So there, you're actually touching on the three areas that impact liquidity: the current ratio, the accounts receivable stuff, and also the inventory ratios. Okay, so be comprehensive, but you don't have to list like the comparison between every single ratio. For solvency, we said already Walmart is better. Those are 10 and 11, right? Walmart is better in all the solvency ratio, so it's more solvent than Target. Profitability, with the exception of profit margin, remember Target's profit margin was slightly higher. Walmart betters Target in all the profitability ratios, thus it is more profitable than Target. So I guess just in conclusion, when you just finished, whatever it was, 12 calculations, you might think that you have to go, crazy with writing up every single thing. When you read the question, you see that they specifically ask you to speak within the 3 categories, which actually helps to limit the amount of writing that you need to do. Does anybody have questions about this?
No, Professor.
All right. So exercise 18-11. Here's the income statement for Myers Inc. Sales, cost of goods sold, gross profit, all the expenses, they carve out, they show you how much is interest and how much is income tax in those numbers, which already makes you probably realize that you're gonna have to calculate times interest earned. There's a net income of 106,000. This is like the one we did this example in class, so you should be able to handle it fairly easily. So it tells us some additional information. Common stock outstanding January the 1st, 2020 was 16,000 shares, and 24,000 shares were outstanding at December the 31st, 2020. So when we do earnings per share, we're going to look at a weighted average number of shares. So this is part of the information that you need for that. The market price of Myers stock was $10 in 2020. So when we do price earnings ratio, we need the market price and the earnings per share to be able to calculate the PE ratio. That's why that information is there. Cash dividends of 29,680 were paid, of which 6,000 were to preferred stockholders. When we calculate the payout ratio, we want to know how much dividend was paid to common stockholders, right, only as a percentage of the net income that was generated by the company. And then, like I said, the last thing here is the times interest earned. So compute the following measures: round earnings per share to 2 decimal places and all other answers to 1 decimal place. So again, please follow proper instructions here so you don't end up getting frustrated thinking your answer is wrong, but it's because you didn't round properly. So for earnings per share, you are doing net income minus any preferred dividends. Again, this is why you want to make sure that you have the formulas ready. You have to remember that preferred dividends need to be subtracted, divided by the average number of shares. The average number of shares is beginning shares plus ending shares divided by 2. So that's, sorry, 40,000 divided by 2 is 20,000. The net income after the preferred dividend is 100,000. So $5 is the earnings per share, which is the number over here. So $5 per share. For the price earnings ratio, saying how many times over, right? Well, people, how many times will they pay the amount of earnings in order to buy 1 share of the company's stock? And so in this case, the earnings is $5. I'm willing to pay more than that because I think the company has good prospects for the future. So I'm actually willing to pay 2 times the earnings that I could get in order to buy a share in the company. So $10 is the market price as given in the question. $5 is the earnings per share. So a PE ratio is 2 times. Then we've got the payout ratio. Like I said, it's got to do with what was paid to common stockholders. So you take the total dividend, subtract from that any preferred dividend, and you divide it by the net income. It's saying we earned 106,000 of net income, but how much of that 106 actually ended up being paid out to common stockholders? Only 22.3%. If you were looking to invest in a company, but you were looking to invest not only for stock price appreciation, but also for income, meaning dividends. You would want to look at what the company's payout ratio is, because if they don't have a very high payout ratio in terms of the dividends that they pay to people, then that's not in line with your investment strategy that you are hoping to also get dividend income from the investment. So this is useful if you just want to see how much the company is paying out of their income over time in terms of dividends. And then the times interest earned. Remember, we said that you basically start with net income, you add back the interest, you add back the taxes. That's the top number. So the top number is net income before interest and before income tax. So it's 137,500, and you divide that by the interest, because you're saying, okay, how many times over can I pay interest with the income that I have? And it's 13.8 times. Why do we add back the interest? Because obviously it's the interest that you want to see if you can cover it. So leaving the interest off of like starting with only net income, you've already deducted the interest. So that's not a good comparison. And we subtract the income taxes because interest is tax deductible. So you're just trying to get to basically a line on the income statement that doesn't yet deduct interest or income tax. If that's too complicated to think about, just remember that you want to get a number that is actually still at least before the interest number, to say how many times over can I pay interest. And the formula exists, in the notes and in the textbook. Questions on 1811?
Professor?
Yeah. Are you asking a question?
Okay, no.
Okay. Let me check the chat in a while. Okay, we're good. So exercise 1802 is the comprehensive income statement, which I also went over with you guys for a few examples at the end of our work in chapter 18. So we're shifting gears here from financial statement analysis to, the preparation of the statement of comprehensive income. And the whole thing about the comprehensive income statement, and I guess also to some extent part of it is the income statement, is that we want to remove items that are or we want to show sustainable income, right? So we want to remove items that are kind of a once-off, maybe occurring in 1 year, but not expected to occur in another year, like discontinued operations. We also want to separately show items that went directly to equity and did not make it into the income statement, so that people can see, what the situation would have been if those items had in fact gone through income. There's a whole lot of accounting theory behind this that I won't bore you with. So Treya Corporation has income from continuing operations of 266,000. So that's a line on the income statement, right? Income from continuing operations for the year. I already said that. It also has the following items before considering income taxes, and we saw the last time that we actually end up netting the tax off of these items, because income from continuing operations is already after tax, right? So this number is after tax. So anything that comes after this number has to be net of tax as well. So I'll show you. An unrealized loss of 76,000 on available for sale securities. So that's a gain of 35,000 on the discontinuance of a division, comprised of a 12,000 loss from operations, so that will be shown separately, and a 47,000 gain on disposal, also shown separately. Assume all items are subject to income taxes at a 15% rate. Prepare a statement of comprehensive income, beginning with income from continuing operations. So you've got your 266 in there. This is also a typical question where you want to go back to the textbook or look at the template, because the thing basically is very similar every time. So after income from continuing operations, you do discontinued operations. You do the loss from operations first, at the 12,000, but you have to net it of tax, any tax savings. So 12,000, you take off the 15%, so the loss is reduced, right? Because of the tax savings, it's reduced to 10,200. And remember, they give you instructions on the fact that you can use the minus sign or parentheses. Then there's the gain from the disposal, net of tax. So 47,000. The gain is also decreased because you would have to pay tax on it. So these two numbers together give you a positive 29,750. So income from continuing operations plus this gain gives you net income 295,750. And then the last piece here is where you just show other comprehensive income, anything that else that hasn't gone through the income statement, and that is where this unrealized loss on the securities comes in. Excuse me. It also has to be shown net of tax, because again, everything below this line is net of tax. So 76,000, reduce the loss by 15% because of the tax savings. So 64,600 is the loss that you subtract, and that gives you comprehensive income of 231,150. Questions there?
I'm sorry, could you do the unrealized holding again?
You want me to talk it through again?
Just that one, yes.
Yeah, so you understand that it's a 76, right?
And then you had to times it by 15, right?
Well, or times it by 85%, right? To see what you actually times by subtract 15% from it. Either way, you should get to 64,600. Am I making sense? I feel
Got
like
it.
okay, yeah. So you can see this, right? This calculator.
Yes.
Okay. So it's 15% tax. So you can say 76,000 times the 15%. That's going to give you 11,400. So
And
then
I
you have
minus
to
it.
say 76,000 minus the 11,400. That's going to give you the 64,600, right? Or
Yeah,
you can.
I keep forgetting when you do it by the 15, you have an extra step, but if you do it by the 85,
Yeah, 85 is going to give you. So either way, just remember that it's a subtraction. For this work, you just always want to make sure that you know whether it was a loss or a gain, because you're still doing the same netting of the tax on all these amounts, but some of them some of the amounts are negative and some are positive. Okay, so that's how we end up with minus 64,600, because it was a loss to begin with. Is that okay?
Yes, thank you.
All right. Other questions? All right. So here we have the final question now. Again, a statement of comprehensive income, and this is the same. I mean, the numbers are not the same, but this is a question that I did with you guys in class as well. So, a lot of this homework is is kind of repetition of things that we did before, and I think for some people, it's going to be maybe just making sure that you have the time to finish it on time, because it really isn't a heavy lift. So in its proposed 2020 income statement, Rabic Corporation reports income before income taxes 493,000. Income taxes 142,970, not including unusual items. Loss on operation of discontinued music division 57,000. Gain on disposal of discontinued music division 42,000. So this loss and gain is similar to the question we just had before. And unrealized loss on available for sale securities of 156,000. Again, so the question is maybe looks like it's presented a little bit differently, but the things that you have to do are going to be very similar, and then they have obviously a different tax rate here, 29%. Prepare correct statement statement of comprehensive income, beginning with income before income taxes. So in the previous one, we started over here, income from continuing operations. In this one, they're taking us 2 steps up to start with income before income taxes. So that's, excuse me, that's going to be this number over here, 493,000. The income tax expense is just going to be 29% of this number. All right, so there's no big mystery here. 493,000 times 29% is the 142,970. You're subtracting income tax expense, so you could put this a minus or parentheses. It's fine. And income from continuing operations then is 350,030. Like I said in the last one, excuse me, we started on that number. That's why we didn't do any income tax, expense calculations. Great. So I keep forgetting when I go back and come back in, the numbers change. But nevertheless, so you subtract this number from the income before income taxes to get to continuing operations of 327,600. Then your first thing to do is deal with discontinued operations, loss from operations of the discontinued division. So this is the 55,000, but you can see that it's obviously not showing as 55,000 because we've already dealt with income tax expense. So any number that is going to be shown after this has to be net of tax. So the tax rate, is now, because I went out of the question, it's now changed to 35%. So you're going to subtract the 35% taxes. So basically the loss is reduced to 35,750. Okay, so that's how you do that. And then gain from disposal of discontinued operation, it was 36,000 gain, but you still have to remove the tax from it. So that's how we get to 23,400. So these two numbers together are negative 12,350 subtracted from the income from continuing operations gives you a net income of 315,250. Now this is where the income statement normally ends, right? We don't go further than this, but because there are items that under normal circumstances would have gone into the income statement, but because of accounting rules go straight to equity, there's still, for the sake of I guess transparency, for reliability, etc., all those types of things, there's still this need to at least show people that there are amounts that haven't gone up here, but if they had gone to the income statement, this is where we would have ended up. So there was an unrealized loss on available for sale securities that goes as part of other comprehensive income. You also again have to net the tax of 35%. So the unrealized loss ends up being 98,150 because 35% of the loss is gone. Because when you have a loss, you get a tax savings. So net income minus the 98,150 is comprehensive income of 217,100. Questions, anybody? All right, so that concludes the Chapter 18 homework. For those who haven't either finished it or haven't started it yet, I hope that I'll try now as soon as the video renders in Zoom, I'll put it up on YouTube, but I hope that you will make a good effort to get this done. And if you need to go back in the video, of course, you can, as you do the questions, you could go back and forth to help and understand what is needed. All right. So that was the first goal of today, was to go through that homework. The second goal is to talk about the sheet I sent you guys via email last night. I hope that by now, given that we've been going for about almost an hour, that people have been able to find the sheet. It's a PDF that I sent. The email that I sent you starts with the words "please read." That's in the subject line. So please find that sheet and let us talk here briefly about what's going on that thing, so that everybody understands. It's normally my practice to do this type of calculation and hand it out to students for your own knowledge to know where you stand, but also to manage expectations, because sometimes people think they're doing much worse than they actually are, or vice versa. People think that things are going really great because maybe they got a good grade on one test, but they forget about the other things that they haven't done. So I don't want a situation at the end of the semester when you've taken the final and I've submitted the final overall grade for the class, that suddenly there's like a shock, that you didn't look. No one's going to contact me if the grade is higher than they expected. I normally get nasty emails, because people thought they were going to get whatever high grade that they thought. And so again, I'm giving you this information to manage your own expectations. So that we don't end up in a situation where people get upset because they had a totally different idea of where they stood. So the first thing that I'll just mention again is extra credit. There are extra credit points available. You have access to this extra credit assignment already. It's due also next week, Wednesday, the 10th of June. It's been open for a while, since the 26th of May. I had announced it in class. A few people have actually completed it already. That's just 10 bonus points. So those 10 points will be added on to, whatever place they will help you the most. Normally that's on the final exam grade. So what I mean by 10 points is if your grade was 80% on the final, I add the 10 points, it now becomes 90. All right. So on the final exam, or I could add it somewhere else. I will work the spreadsheet in your favor, to get your grades as high as possible, so don't worry about that. Also, this sheet doesn't include, so normally the homework, if you look at the syllabus, the homework is at the 15 points or 15%, but the sheet doesn't include the 3% related to chapter 18 because that homework is not yet due, okay? So that's why this is 12% over here and not 15%. The chapter 12 deliverable that we did, this was ages ago when we was, when it started, when we were still physically in class. It was due in March, the 25th of March, I think. So that was 5% of your grade. Most, if not all people did that and did really well on that. Then test 1 was obviously the test for chapter 13 and 14. That's 20% of your grade. Again, you can look at the syllabus. These percentages, were set at the beginning of the semester. Test 2 is also 20% of your grade. The quiz 1 and quiz 2 together count 5%. They're 2.5% each. The final exam, as previously indicated, is 35% of the grade, and the homework is 15% but reduced by 3%. Okay, so that's how the weighting shakes out. So there were 2 things that I said to you that I would do, and I will still do them. But I just actually want to type them here because, I was already getting at least 1 or 2 questions where people were kind of not remembering correctly what I was saying. And it's very important because this is also what causes problems at the end if people get confused. So the first thing was, if your final exam grade is higher than your lowest test grade, right, either test 1 or 2, right, I will drop the lowest test grade. I will not, because I got this question also, I will not drop the final. Okay, there's no way I'm dropping something that counts 35% of your grade, firstly, and secondly, the whole point of this first part is that these tests, or the final exam, I should say, involves, sorry, there's a lot of sirens in my area here. These tests cover material that is also on the final. So if you can show me on the final exam that you've mastered the material to the point that you did better on the final in that, in the material than what you did on your lowest test, it makes logical sense to me that I can drop the lowest test grade because the final is cumulative, right? It includes stuff from the previous tests. Okay, so there's no dropping of the final. Unfortunately, if you bomb the final, I have to incorporate that grade into your overall grade for the class. So please plan to study, plan to be prepared, plan to have whatever templates and formulas and things you need to have ready. You've got a week until until the window closes to take the final, so there's still time, right? It's not, I didn't make it a super short time frame. I want to give you guys time to study and so on. And then the other thing that I said was, if the quiz grade related to a test is lower than the test grade, I will drop the quiz. So for example, because I think it's necessary to do an example, because again, I got questions about this. The quiz 1 grade is 90, and I'm just making this up, right? And the test 1 grade is 95, okay? I will drop the quiz and count 95 as the grade for both the test and the quiz. If the quiz grade is 95 and the test grade is 90, I will keep the quiz grade because it raises your overall grade. I will not drop the test because the quiz was higher. Okay, that's not going to happen. The quiz is only 10 multiple choice questions. The test is the comprehensive testing of those chapters. So I'm not going to drop your test grade because your quiz was 90 and your test was 70. So now I should substitute the test for, with the quiz. That's not on the cards. But certainly I will drop any quizzes that are lower than tests. I've not done that on the sheet because I do all these things at the end. I need you to see for now, based on the sheet that I gave you, where you stand, just based on everything that you've done up to now, before any substitutions, any extra credits, anything like that. So with these, I guess, items, items in mind, does anybody need further clarification on what is getting dropped and what is not getting dropped? Anybody? All right. If a question still comes up at a later stage, you're welcome to tell me or to stop me. So when it comes to the homework grade, I just want to also be clear, although I did say this in the email, all of the stuff is coming from Wiley, okay? So the numbers that I'm using are the same numbers you see when you look at your grade summary in Wiley. So for homework, I looked at, what did you do in chapter 13? What did you do in 14? What did you do in 15? And what did you do in 17? Sorry, I'm messing myself up here. So let's just say for chapter 13, you got 7 out of 10, right? For 14, you got 10 out of 10. For 15, you got 8 out of 10. And for 17, you got 10 out of 10 again. So all I did was I added up, right, these numbers, whatever they were for you. Some people had 0 for some of the stuff. Because each one was out of 10, obviously the total is 40. So I just said, okay, what is this number divided by 40? So it's 87. So the grade is 87.5. Okay, that's how the grade that you see for homework came about. So let's just say this person had 87.5 for homework. Let's say this person got 100 for the chapter 12 deliverable, because many people did. Okay, let's say this person got 90 for the first test and 75 for the second test. The person got 80 for the first quiz and 70 for the second quiz. I'm just making up numbers, okay? So this person at this point would have 84%, right, which is a B. So 84%, that's a B. That's what they, sorry, let me just do this. That's what their grade is to date in the class, because it's all the points that they accumulated over a year, obviously besides the final exam, all the points that they accumulated divided by the points that were available to date. So when I'm talking about available points, I'm saying all these things are already completed. So is 12% of the homework. So together, it's going to be 62% of the points that have already been earned in the class. Are we still okay? Or any questions up to there? All right. So if this person said to me now, okay, Professor, what do I need to do in the final? I'm trying to get to a B plus. Oh, here's a question. Hang on. Okay, this is a private question, but I'll just speak to it in general, and I'm glad this is being asked. There are no the tests and the quizzes happened when they happened. There's no additional, I'm not reopening tests and quizzes so that people can try to do better or make those up. That whole discussion already occurred. So now you need to be focusing on the final exam, which counts 35% of your grade. I know a few people also emailed me to ask me, is there extra work that they can do? Don't look for extra work. Study for the final. The final is by far the biggest. I mean, it's huge. It's 35%. It's by far the biggest way that you can make back any points that you are needing. And of course, there's the 10 points of extra credit. So I've handed out, work that can help to boost your grade in the form of extra credit. But I'm definitely not encouraging any type of even more extra credit, because 10 points of extra credit doesn't really substitute for the 35% that you should be focusing on in the next week to be able to do as well as possible. If you ever, like this person, this 75% here, right, that they have on test 2, if they can beat that percentage in the final, then remember I said I will substitute the grade. So again, I want you to be careful about trying to go back and do things. It's unfair to the class if I suddenly open up work that, was already closed to everybody else. But I also think it's going to distract from the fact that you should be studying for the final. So for just, I guess, let me just say, how do we move forward with these numbers? If someone maybe wants to figure out what they need to get on the final in order to, in order to earn whatever grade they want to earn. So the chapter 18 homework is still outstanding. Let's say the person finishes it because we went through everything today. They find that it's fairly easy, so they get 10, right? They get 10 out of 10. So we add that extra 10 over there, and now we divide this by 50 because now it's all the homework. So now they have 90%, right? This thing is a mess. Now they have 90%, and this is out of 15 now because it's everything. I don't know what's happening with my goodness. Let me just save it as a Google sheet because it's obviously because it's not in the system. It's just kicking out all kinds of nonsense. Sorry, just 1 second, guys. Sorry, I didn't mean to flash people's names. I don't know why this thing is acting up, but let me try again. So let's just do the calculation. So what is 90 times 15%, right? 13.5. So the answer here should be 13.5. Issues with this sheet notwithstanding. Okay, 13.5. So let's talk now about where this person ends up. And I'm sorry, there was now a lot of things that happened, but let me just backtrack. So the first thing is that this person got 10 out of 10 for chapter 18's homework. So that pushed their homework grade up to 90. 90 out of 15% is 13.5%. Then we've got the final examination still open, 35%. We don't know what grade they're going to get. But what you can do, and this is what I was trying to say, what I was trying to get you guys to do, and it's like, it's impossible. Okay, I finally figured out why that's an issue. It was like impossible to do. But what you can do now is you can start putting in numbers. So maybe this person's going to study like super hard and they're going to aim to get 90, right? 90 on the final. If they get 90 on the final, then I can also substitute this low test grade with the same 90. So if they get 90 on the final and I leave everything as is, then they'll have a B plus, right? Because I'll round them up to 87. But because I'll drop the lowest test grade, if they get 90 on the final, then this number becomes 90. So then they'll actually round up to an A minus. All right, that's what I'm trying to say. If the person had, they had 75 on test 2, let's say they do 80 on the final, I'll still substitute the 80, right, for the previous 75. So now they're down to a B, right, and so on. You can manipulate this thing. If anybody wants me to send them the Excel sheet with all the formulas already put in, I'll be happy to do that. If there's, let me just stop the share for a minute because I just want to look at the questions. Someone's asking me, is the highest grade? No, the highest grade as of now is not 62. There was 62% of the points were available. So if you got 62 out of 62, then you have 100% in the class. And anything lower than that goes by percentage. So it's not that the highest grade that someone could get is 62. It's just that the available points are 62 because there's still 3% for the chapter 18 homework and then 35% for the final. All right. So if you are sitting on an A right now, for argument's sake, in the class, then that's great. But remember that the final counts 35%. So you still have to maintain, a high average on the final because you could end up, not having an A in the class at the end. If you decide, because this happens sometimes with students, I just want to be clear that don't think because I'm showing you that you have an A at the moment, that's only because that's for the 62% of the work, basically 2/3 of the work that you've already done. There's still 1/3 of the work to be done, and you need to maintain the same rate of your grade in order to finish, on an A. And I guess to that end, let me see if I can show how this might be. Like, let's just say someone is averaging, basically very, very high averages. I'll just make the quiz and the test the same. Sorry, my Google Sheets is a problem today. So let's just say that's where this person is, and now we want to know, if they get a 95 on the final, they're in A territory. They're great. But let's just say they get a 90. So they were averaging. When it was out of 62, they were basically almost averaging 100. But let's just say they get a 90 on the final. 93.43 is an A minus. Okay, so if you're averaging an A right now, but you average less than an A on the final and you didn't do the extra credit, you could end up having, you could end up one letter grade below where you stand. This goes for any letter grade. If you're averaging a B right now and you don't get a B or higher on the final and you have no extra credit points available, then you will not be averaging a B overall for the class. Your grade will drop. Okay, so I know that sometimes people are like, oh, well, what's the minimum, you know, that I can get or whatever. Just be careful, okay, because you don't want to underestimate the grade that you need to get on the final, because remember the final is very heavily weighted. And I just want to caution you to be careful not to kind of take it as, oh, it's no big deal because I already have an A in this class, so I can kind of just, you know, wing it. Don't wing it, because if you do, there's nothing I can do to help you. If you go, just watch out. This is just math, right? So if you got a 91, I could round you up to 94, right? And that would be an A. But I only round people up from 0.5 onwards. So if you are literally 0.4, then you stay in A minus. So again, if you want access to this thing or you want to talk more about how to do it, I'll stick around at the end. If people want me, I won't record, obviously, but if people want me to do this, to do something for them or send them the spreadsheet, I'm very happy to do that. Oh, someone's asking, how does the extra credit points help the final test score? Okay, so I can speak to that. So let's say this is you, right? So this is when we're gosh, this thing is so annoying now. This was out of 62, right? Let's say this is you. If this was you now, then you're almost averaging like 100% for the class, right? But now someone's asking me how does the 10 points of extra credit help? So you might be averaging an A. Some people are averaging 100, some people are averaging 99, in this class. But let's say you have a whole lot of other classes you need to study for. You don't have time for, for this class. So, so it kind of just is, and you end up getting 80% on the final. So you were averaging an A, but now you're averaging a B plus, right, which is not great. But you had 10 points, right? You had 10 points of extra credit. So because of the 10 points of extra credit, I changed this 80 to 90. And now you're averaging, even though it's not an A yet, you're averaging an A minus. Hopefully that answers, because someone asked, how does the extra credit help you if something happens with the final? Those points get added directly onto your final exam. And I don't stop at 100. So if let's say someone wasn't doing that great for the semester, and then they suddenly like destroy the final and they get like 95 on the final and they have 10 points of extra credit, then your final exam grade becomes 105. I'm fine with that. All right. So I'm not going to cap you at 100, because I know that if I add on those extra credit points, it's still going to help to push your grade up further. More questions? More questions?
Nope. Thank you, Professor.
All right, so if there are no more questions, what I'm going to do, just to wrap us up here, is to go back and just show you that this is the final exam sheet. You already know this. It's opening today. No one has to do the exam today. It's just open today. Just in case there are people, because I know there are people who have worked so far ahead that they are likely already ready to take the final. So I don't want to hold you back. So it's open this morning. It's closing next week, Wednesday at 11:59 p.m. It's 35% as already discussed. There is a final exam review, and just to clarify, because I had a few emails with this question also, although I did say it in class, but I just want to reiterate that the final exam review does not count towards your grade. You can see it's not in the grading scheme, the grading calculation. So that is just for your own practice, right? Because sometimes people ask me for extra practice or what should they practice or whatever for the final. That's for your own practice. I know it says it's out of 15 points, but it's just because there are points attached to each question, not because I'm going to weight it into your grade. So if you don't want to do the final exam review, right, not the final exam, if you don't want to do the final exam review, that's entirely up to you. It's purely for practice. The final exam itself, however, should be completed. And you can see on Wiley Plus, they are very clearly marked. Okay, so please don't tell me on the 10th of June that you did the review and thought that you had done the final exam. Okay, this is the final exam. It has the format that I will discuss here in a minute. So the final exam covers the chapters 13, 14, 15, 17, and 18. You can see that 12 is obviously not included. And also within, those chapters, I'm focusing the there's 10 multiple choice questions. They're 1 point each, but I'm focusing the exercises on very specific things. This is 90% of the exam is these items. I already worked on Monday through an example that's like this with you guys. If you weren't in the Monday class, you can go back and watch that video. It's already on YouTube. And I also worked through a dividends example with you guys on Monday. Today, we went through ratio calculations. Remember the formula sheet? You just finished your tests with the cash flow statement and the bond work. So hopefully that's still fairly fresh in your memory. But again, I'm listing exactly what you should expect to be seeing in the exam. So you should be preparing for the exercises. You should be preparing that way. For multiple choice, it's going to be, a combination of theory and calculations related to material that is in, those chapters. So you should at least give the chapter a read. Or if you are super pushed for time, you should at a minimum go over the homework again for those chapters and look at the class notes. It is a time test. Once you start, you have to complete it. It's 4 hours long. You don't need 4 hours, but remember I've been giving 4 hours for the test this semester because of the fact that people's internet might sometimes act up. You have 4 attempts at each question, but after the 3rd attempt, you could choose to access account names. You don't have to choose that. If you do choose that, then it's 5% comes off. So at that point, the question is helping you by giving you account options for account names. After the 4th attempt, right, you will have access to the solution if you want to look at part of the solution to help you, but then your point potential drops down by 15%. So then at that point, the maximum score you could get on the final is 80%. Again, these things are optional. The solution isn't going to suddenly pop up and say, oh, oops, now you or minus 15%. You have to opt in or opt out. As usual, please study. I know it, in effect, this is like an open book exam, but open book exams are pretty difficult if you didn't study at all, because you are kind of looking around, paging around, trying to figure out where the answers are, and that's not a good use of your time. And also pay attention to detail. Sometimes because of getting us, we get flustered because it's a test. You're not watching what you're doing on the screen, and it turns out that you're just making a silly mistake over and over. So just give yourself some grace, take a breath, look and see, maybe it's just something really obvious that you're getting wrong. Don't, be careful with your attempts at the questions also. You know, don't just start typing things or guessing or whatever, because you will run out of time the more attempts you use. So, you know, try to be sparing and think about what you're doing. I will remind you that you can't have 2 instances of Wiley open simultaneously. You guys know this already. So if there's something that you know that you need to see in the textbook, like you know, it's like, oh, I can never remember what the names of the operations are for the cash flow or something like that. I highly recommend that either if you have a printer, print out a sample cash flow so that you have all those words handy, or 2, take a picture if you have to on your phone or something, so that you will be able to look at the template. Because remember, I've told you in the past, if we were in class, I would give you the template. I don't have a problem with that. Okay, so prepare in such a way that you have everything that you need ready, so you don't have to suddenly realize during the test that you aren't able to access the textbook because you can't go out of the test, and now you're in a position where you aren't able to find something that you needed to find. All right, so those are, I guess, some of the words that I'll say. I'm aiming for, I don't know, I hope the grades are due by the 15th. I'm aiming to try and get them done by the 12th. But depending on what time I submit them on the 12th, you may only see them on the 13th. So, you know, I guess that's another day potentially, depending on what CUNY does. And then for the people who are graduating, first of all, congratulations. And then secondly, if you haven't already, go onto LaGuardia's website and search commencement, and you'll see the commencement page where they talk about the virtual commencement, the speeches, and so on. There's an opportunity for you to participate if you would like to. Does anybody have more questions about the logistics of the exam or anything like that?
No.
All right. So that's what I have. Oh, hang on, someone's asking me something. Someone's asking how much is the reading and review worth. It's not anything that I did not weight into your grade calculation is not in your grading. Remember, our class was set up to be in person. If this had been a fully online class, I would have weighted the reading in. So if you haven't done any of the reading and review, I mean, I'm not sure how you would have managed to do the homework at that point, but if you haven't done it, you don't have to now scramble to speed read through every chapter because you're concerned that it's going to affect your grade. It won't. I certainly do highly recommend that you read the textbook in order to prepare for the final if you haven't done that already, but there's no concern. If someone has all zeros in the reading and review, that's not going to negatively affect you in any way. Someone's asking me now again, how many questions are there in the final? It's all on the final prep sheet, right? There's 5 exercises and 10 multiple choice questions. Other questions? Okay, so I'm around via email if people have questions, struggling with material, whatever you may be having difficulties with. I'm still, yeah, I'm not going anywhere. So I am happy to virtually, you know, tutor you via email and so on. And if you want to stick around and talk to me more about a specific issue that you have, I'm happy to do that. But other than that, I want to thank you, since it's our last day, I want to thank you so much for staying the course here, for sticking it out. It's certainly, you know, not only an unprecedented semester for us, but I mean, at a time in the history of humanity that probably only comes around once every 100 years. And I just want to commend you for prioritizing your schoolwork, even in the midst of what has obviously been a very, very trying anxiety and grief riddled time for all of us. It's been my absolute pleasure to teach you. It always is, but especially in this time, you may not believe it, but I'll say that the fact that we were meeting twice a week has really provided an anchor for me to just have, you know, something, believe it or not, right? Something to look forward to in the midst of being on lockdown. This class has been a pleasure. You guys are doing excellent work. There are some struggles, but I know that people are trying their best. So I just really hope that you will continue to do that as you prepare for the final, that you will lean on me if you need support. And that you and your families and those that you care for will stay safe, and we'll keep, I guess that we'll all keep our chins up, that better days will be coming. All right. So thank you. You're dismissed, but if you have questions for me, I'm still here. Okay.
Thank you, Professor. Have a great
Bye-bye.
rest of the semester, and congratulations again.
Thank you. Yes, the baby is going along fine. Thanks.
Perfect. And you're doing an excellent job. Take care.
Thanks.
Thank you.
Hopefully it feels
Thank
Thank
better.
you
you.
very much,
Thank
Professor.
you.
It was a great class, and you are an excellent professor. So I'm really happy I had you as my professor.
Oh, it was my pleasure. I was very happy to teach you as well.
I enjoy your class. Thank you very much. Appreciate it.
You're welcome. Bye bye.
All
Thank
right.
you,
Take care.
Professor.
Bye.